In today's economy, more people than ever are looking to buy and sell businesses. But how do you do it? Welcome to the Deal Board, presented by Transworld Business Advisors. Straight talk about real deals and real people. Listen to stories, interviews, and expert advice to help your business sale, merger, or acquisition process. Now, here are your business exit experts, Andy and Jessica.
Hey, we're back, and we did promise an episode ago that we were going to bring back Robert Johnson because our conversation was going so well talking about minority investment. And then he brought up the term opportunity zone, and we were like, wow, we need to know more. Right, Jessica?
Right. And opportunity zones have become a little bit of a buzzword in the investment community, mainly in real estate, but now in business acquisitions too. So we thought this is a great time to bring Robert back and talk about these opportunity zones and how it's related to business acquisitions.
Yeah. So welcome back, Robert. And give us an idea what opportunity zones are and how it's fitting into your model that you're kind of launching in Chicago.
Sure. Thanks, Andy, and good to talk to you again as well, Jessica. So when I think about minority investment, one of the things that I think is probably the most exciting development that has probably taken place in the last 30, 40 years is this opportunity zone legislation. And I think it could be a great tool if used properly to do well and do good at the same time, which is, I think, the goal behind it. And what an opportunity zone is. So there are certain census tract areas that each of the governors of the states have been given or have designated, I should say, as opportunity zones, or in other words, areas where these communities have been disinvested in for a whole variety of reasons. Most of them are either very rural or urban communities that have seen some blight and have not seen the same level of economic activity and investment as other parts of the cities and the counties that they're located in. And so the idea behind an opportunity zone is to stimulate investment into those areas in a way that benefits both the community and the individual investor and makes it a lot more attractive. So typically what a lot of economic development focused on were TIF districts or tax increment finance districts and other incentives that either the state or local government had to spur economic development. But the opportunity zone legislation was part of the most recent tax reform bill passed by Congress in I can't remember if it was 18 or 17. I think it was early 18. And basically what it allows an investor to do is defray capital gains tax, 100% capital gains tax for an investment into a qualified opportunity zone if the investment is held for a certain period of time, 10 years and a day. So you can, if you got $100 million capital gain, and there's no limit as far as I know. The legislation is still kind of in progress and still being hammered out, but as far as I know, there are no caps on it. So if you take whatever amount of money you get as a capital gains, and you want to park it like through a 1031 exchange or whatever it is that you use to recognize and realize this gain, you can invest it into an opportunity zone. And what most people have focused on is the real estate. So whatever capital gains that you got from that prior investment and any appreciation you get from the asset that is invested in the opportunity zone, you hold it for the requisite time, 10 years and a day, you pay no taxes on it. So it's a huge incentive for long-term investment into a community. And the easiest and the most, I should say the easiest, but where we have the greatest amount of guidance currently is around the real estate component of it. So if you buy a real estate development, or buy into a real estate development and hold it for that requisite time, then folks are pretty clear in terms of how that works, because you can kind of project out what you anticipate your return will be. Where there's a little bit more, I should say a little bit less clarity is around the business that would sit also on top of the real estate. And that's where I think the exciting opportunity is. Unfortunately, because of those regs, as I know, are not completely, have not been completely clarified because of the government shutdown, those 30 some odd days. That stuff was supposed to be happening during that time. So I think there's due to be out within the next couple of weeks or months to give some greater guidance. But the idea in principle is that you get also the appreciation from not just the asset being the land, but also whatever the appreciation is from the business as well. How that exactly is going to be treated, I can't speak to yet because they haven't fully decided that. But that's the leaning that everybody expects to take place, or the direction that everybody expects to take place. In addition to that, as a result of this, as you might imagine, a number of opportunity zone funds have developed or have been created. There's a number of them that are being developed for both accredited and non-accredited investors, so that if you don't actually want to invest in a specific project, and there are funds that will be invested in opportunity zone projects, and then you can invest in the fund almost like a mutual fund and still recognize the same capital gains treatment as if you invested in the original project. So I think this is exciting because, again, it's attracting new dollars as opposed to what had been traditionally sort of government dollars and government funds. And as we all know, most of our governments or most of our states, state funds are tapped out. And the government is already operating at some pretty big deficits. So for them to be able to continue to develop some of these minority communities without there being some kind of incentive would be a heavy lift. So the ability to attract private capital into these projects and sort of a public-private partnership, I think is a great opportunity for us as business brokers and intermediaries to be able to advise our clients about this whole new really arena that is particularly ripe, and you can get some pretty create some pretty attractive opportunities for your clients by being aware of this and developing relationships and becoming knowledgeable about this area of opportunity, that being the opportunity zones.
No pun intended, right?
Not intended.
Yeah. I mean, like, and you mentioned it a little bit, Robert, but right now the legislation is a little unclear around business acquisitions, but we are expecting that to clarify. And I think, like you talked about, it does present a lot of different opportunities for acquisitions for businesses in these rural communities, some of these minority communities. And I know we have an interview today actually with someone from the state of Colorado, and Colorado's taken a big stance in pushing these zones. And I know some other municipalities have as well. How do you see this type of investment transforming some of the communities in your area in Chicago? Last time you were on the show, you talked about economic transformation. Do you think opportunity zones can help in some of those communities in Chicago as well?
I think it's critical. Absolutely. I think, again, a lot of the reason why some of these communities remain blighted is because of a lack of outside investment. I mean, when you look at sort of the non-opportunity zone communities, they have developers that come in and they see that this parcel, this neighborhood is viable, and it makes sense, and these numbers pencil for me to be able to get a return on my investment. Well, unless when you look at communities that have been traditionally disinvested or not invested in, the numbers just don't pencil for a developer because you have to wait on the return, the risk versus the return, or the risk versus the reward is a lot more speculative. When you know that you're going to save 100% tax and you're going to get full appreciation and you're going to be buying depressed land, and in many instances, a lot of the land is given away. or giving it a nominal value to further spur economic development, it makes the numbers make a whole lot more sense. So there can be an opportunity for rapid transformation because if you go through the south side of Chicago, the west side of Chicago, Detroit, East St. Louis, a number of cities in the country, there's acres and acres of abandoned land that the city has on its books that is more than willing to offload to somebody who's willing to develop it. So I just think it's a great way for capital that would otherwise not even consider these neighborhoods as a viable opportunity for them to look at it, because it makes financial sense now. It's not dependent upon the goodwill or the benevolence or the philanthropy of somebody to say, hey, let's do something about this area. Now there's an economic motive, and in a capitalistic society, we've seen time and time again that usually is enough to get someone's attention.
Yeah, and we've seen that too, even in CRA and other affordable housing projects, that it really does take incentivizing the capitalists to get involved in. And most I've seen, even in my community in Fort Lauderdale, we're working on affordable housing. People do want to do the projects, and they're even willing to be a little less profitable. But when you throw something like an opportunity zone into the mix and you make it profitable for them, I think it is going to be bringing big dollars. And hopefully, Transworld and you can use your model to get some owners in there owning franchises in some of these properties or in some of these businesses that, like you said, instead of just creating jobs, you can create wealth.
Yeah, and I think when I think about Transworld in particular, I think our brands are uniquely suited to be, particularly Transworld itself, but the other UFG brands. I mean, I think about a Venture X, and I know that currently Venture X probably would more likely be leaned towards a more affluent area, just because of the numbers that are involved in owning a Venture X. But if you put a Venture X in an opportunity zone, and ironically, the opportunity zones, we're not talking about places where you think it's so weird the way the opportunity zones work, is that some area that you think would be an opportunity zone isn't, and some areas that you think wouldn't be one is. And the example that I use is in my territory. I have the most affluent probably part of the state. I have downtown Chicago as part of my territory and the South Loop. And while there aren't any in downtown Chicago, there are a huge area of the South Loop that's an opportunity zone. So I could see a Venture X going up in the South Loop of Chicago easily, and it would be a great boon to the investor, a great benefit to the community. There's definitely density there for a shared office space opportunity. There's still ample opportunity for restaurants with a great Greek or John Smith sub. So there's plenty of ways that we could leverage the UFG brands to help transform communities as well. Not to mention the other brands that we've started developing a relationship with that are looking specifically to kind of be pioneers in some of these areas, because they know that there's also pent up demand. I look at one area of Chicago that we're trying to develop and working with a church as just one corridor on 95th Street, which is maybe, let's say, 5 miles. Maybe it's not even a 5-mile stretch. Let's say a 3-mile stretch. And we had a economic study done on that little 3-mile stretch, and there's $198 million retail gap in that 3-mile stretch of one street. In other words, if there were businesses that were opened on that street, there's an ability to generate another almost $200 million in revenue if the businesses were there on that street. So I think that a lot of people are overlooking what could be extremely lucrative opportunities because of the state of where the communities are as opposed to where they could be. And now these opportunity zones and other incentives that exist that folks are not educated on, community block grants. I mean, there's grant money out there as well to be able to develop neighborhoods. And here in Chicago, there's something called the Neighborhood Opportunity Fund that was created by Mayor Rahm Emanuel that requires developers who are developing high rises in downtown Chicago to anything over 7 or a certain number of stories. I can't remember the exact number. They have to pay into this fund, which then that money is used to provide grants and gift grants up to a small grant is considered $250,000 to a minority business owner who opens up a business in one of these neighborhoods that is designated as being an opportunity that needs investment. Now it's a grant for renovation and like facade and equipment and things of that nature, hard costs that would transform a business into is for acquisition or transforming a space into a business, so that if that business moves out, the next business doesn't have to do all of that same stuff. Maybe have to make some renovations, but don't have to go through the whole process again. But it's a great way for businesses to get started and for investment to take place, again, through a public-private partnership.
I think all these programs are great. And I think the biggest thing for our listeners to take away from this episode is that, opportunity zones are just one piece of the puzzle. But if you're looking to buy a business, especially, you should be doing some research in the area that you're purchasing the business or the municipality or the state to see what's available. Robert, you mentioned that you'd be surprised where these opportunity zones exist. And if you do a simple Google search, you can usually find a map in your state. But just in Colorado, there's 4 different opportunity zones in downtown Denver, which you wouldn't imagine that would be happening right now. But there's a lot of different incentive programs out there if you're buying a business or investing in certain communities that you do need to educate yourself and make yourself aware of, because you might be missing some very good incentives and tax incentives through the purchase of the business.
Yeah, absolutely. I mean, I think of this as just another arrow in our quiver in terms of being able to advise our clients about their overall investment strategy. I mean, I know I come from the franchise world, and we look at type. We call it a parcel, B parcel, C parcel, and I think this new calculus or the new opportunity zone process kind of changes some of that calculus, because now this could something that was probably not even on the radar of a place where I would put a business now could jump up to an A, because the numbers make more sense to do it over here than something that otherwise would have traditionally been an A. Because with those A comes higher costs. So yeah, you may get a prime location, and you may have an expectation of certain projections on this business. But if I could go somewhere and my total investment is less, and I'm getting a great, as good, or if not, or even a greater return, that changes my definition of what an A location is.
Yeah. So I you've brought up so much today, and we might even have to have you on again. But even beyond that, so Robert, obviously you're very knowledgeable in this area. How best, if someone wants to know more about investing in opportunity zones or, opportunities in Chicago, or even if they just want to talk about minority investment in general, how best to get in touch with you?
Sure. I'd love to help out in any way that I can. And the best way to reach me is on my cell phone, because I'm never in the office, but cell phone and email. So 312-925-4579 is my cell. And then my email is rjohnson@tworld.com.
Well, Robert, thank you again for joining us. And I know we've got some other great interviews on today's show. So I hope the listeners take a lot of information and take a lot of notes on this episode. But thank you again, Robert, for joining us. And we'll talk to you soon, I'm sure.
Great. Thanks.
Transworld Business Advisors is the world's largest business brokerage and mergers and acquisitions firm with over 500 brokers in nearly 200 offices worldwide. Transworld's team handles thousands of business sales every year. To be connected with a qualified business broker or learn more about the buying and selling process, visit tworld.com/the deal board or call 888-719-9098. Hey, Andy, you know what time I think it is? I think it's time to talk about our deal of the week.
Deal of the week.
All right, so each week we like to feature a deal, what we call the deal of the week, and we often like to highlight deals that we do for good people. So good deals for good people. So this week we have Matt Prescott from our Denver office talking about a moving company that we sold in a rural market recently. So Matt, I'll let you introduce yourself and talk a little bit about this deal and how they found us and what kind of company it was.
Yeah, thanks, Jessica. Hey, this is Matt, broker here at Transworld Denver. Recently completed a deal up in a rural area up in the mountains. And I wanted to highlight this deal just because I thought the people that we were able to help out, both on the buy and the sell side, really knew what they were doing. And it was just a really good deal for everybody involved.
What size was the business and what were kind of some metrics and the numbers of the deal?
Yeah, sure. So it was a pretty sizable little business for what I've seen up in the mountains. Their top line revenue was about just a touch under 790,000. I calculated their discretionary earnings at about 262,000, and we were able to bring them to the market at 575,000.
So before we get into the buyer and deal structure and everything, what prompted these business owners to want to sell? What was the pull for them deciding to walk away from the business and do something else?
Sure, yeah, and that's kind of one of the more interesting pieces of this story, I think. So they actually reached out to us. Unfortunately, they had a little bit of a tragedy in their lives. So the business was owned by a great husband and wife team. They had been running the business for about 18 years. They had 2 children, and unfortunately, one of their children actually passed away. So that was kind of the driving force behind it. They really just wanted to exit the business and move out of state to be closer to their other child. So that's kind of how it all started.
So we know every deal has its challenges and problems that we have to work through. What were some of the challenges that you faced in this transaction?
Yeah, so I think, well, the main challenge was just given its geographic location, it was a little bit more difficult to find a buyer, just because, like we had mentioned, it was in a more rural area. I think that kind of shrunk our buyer pool. So that was one of the main challenges. And another one of the challenges, just not to get too into it, but unfortunately, the seller's mother actually ended up passing away in the midst of our deal during the due diligence process. So needless to say, her head wasn't completely there. And she knew most of the financial data. So she was an integral part to the deal. And obviously, we don't want to push someone who's going through something like that. So just the balance of really, continuing to coach her through the deal, but also being, very cognizant of what she's going through. So I think that was another challenge on the deal.
So you eventually found a great buyer and really a perfect fit for this business. So tell us a little bit about how you found that buyer and, what his intentions were for the business.
Yeah, so we actually found this buyer. We had made a connection with him through his searches for other businesses in our listing portfolio. So being able to learn what he was looking for, primarily, a B2C service company, just in Colorado in general. But so the first time I engaged him wasn't even on this deal, but in talking to him and learning what he's looking for, we were able to put this deal in front of him, and it checked a lot of the boxes. And again, at the beginning of the podcast, I think I mentioned it was, a pretty cool story for both sides of the deal. But this gentleman was actually a U.S. veteran, very savvy, ended up becoming pretty financially successful in his own right after his service ended. And his whole idea was to purchase these businesses and actually input new veterans coming back from their service into them in a management role and then structure the deal with them as to, that way down the line, they would be able to buy him out, and they would have the business on their own. But he was able to kind of coach and mentor, the new veteran in the business. So it's actually really, really neat business structure.
It's a really great story of providing jobs for veterans coming back from service and also developing them as entrepreneurs, especially in the veteran community. Now there's actually a decrease in the level of entrepreneurs over time. So it's a great, great story. So Matt, tell us a little bit about the deal metrics. What was the final selling price? How was the deal structured? Things like that.
Yeah, so I think we were able to get him a very fair price for the business. We ended up selling at $525,000 total purchase price, and then we structured that with cash and carry. So the majority of the cash up front, along with I believe it was about a 20% seller carry note on it, just to make the buyer a little bit more comfortable, free up a little bit of the capital, just because he did want to make a couple tweaks of the business, add a truck or so and some additional storage units. So it really worked out, really well for everybody involved.
Great. It's a great story and a good example of doing good deals for good people. Thanks so much, Matt, for sharing with us, and thanks for coming on.
My pleasure. Thank you, Jess.
Welcome back, everybody. And today, as you know, we're talking about opportunity zones. And I have a very special and unique guest joining me today, Jana Persky, who's the Opportunity Zone Program Director for the Office of Economic Development in the state of Colorado. So Jana, welcome to the show.
Thank you. Thank you for having me.
Jana, why don't you tell us a little bit more about yourself and the role you play in opportunity zones in the state of Colorado?
Sure. So I, as mentioned, I'm based in the Office of Economic Development and International Trade, and I've been working on opportunity zones since last summer. This is a investment incentive that passed at the end of 2017, and then in early 2018, each governor had the opportunity to designate the zones within their state. Once those were all approved in around April 2018, then it was up to each state to figure out what they wanted to do with these zones that were now on the map. And then Governor Hickenlooper, as well as the state's then head of economic development, Stephanie Copeland, identified opportunity zones as a priority and as a really exciting opportunity, for lack of a better word, for the state. So I started working on this in June of last year, and then was really excited as Governor Polis came in. He and our new executive director of economic development, Betsy Markey, were also, excited about this program and actually decided to expand our office's support for it. So I now get to spend 100% of my time on opportunity zones as the Opportunity Zone Program Director, and we'll be building out our team and our support over the coming months.
Great. So, before we jump into some questions, why don't you explain to the listeners what an opportunity zone is and what that term means?
Absolutely, yeah. So as I mentioned, the Opportunity Zone Program was created as part of the 2017 Tax Cuts and Jobs Act. That was the tax reform bill. But it had actually been kicking around in a variety of different forms prior to that tax bill. I think it was the Investing in Opportunity Act. And there's a bunch of people on both sides of the aisle that were really excited about it. Senators Tim Scott and Cory Booker were the two main sponsors, but I think at one point there was over 100 co-sponsors across the Senate and the House for this particular provision of the bill. And the reason people are so excited about opportunity zones is because coming out of the recession, parts of this country have seen tremendous wealth creation, but there's some really interesting maps, and data sources that show almost all of that wealth creation has gone into a few concentrated areas, primarily on the coast and primarily on in urban areas. And so the goal of this incentive is to take that wealth and that capital that's been gained and distribute it out to distressed and rural communities across the country. And so there's a couple ways that the incentive does that. The way it works is that a taxpayer who has capital gains has to move those gains into an opportunity fund, and then that fund invests in opportunity zone property within the designated opportunity zones. And I'll kind of talk about each of those pieces in turn. But for the taxpayer, there's three main incentives. The first is a deferral of their capital gains. So if you get lucky today and sell a bunch of Apple stock and make $1,000, if you invest that gain into an opportunity fund, you don't pay capital gains tax on it this year. You also can get a basis increase, which is basically a decrease in the amount of capital gains you have. So that tax bill on that initial investment comes due in 2026. But if you have held your investment in an opportunity fund for 5 years prior to 2026, you get a 10% basis increase, which means that you only pay capital gains tax on 90% of that initial gain that you rolled into the fund. And if you've held your investment for 7 years prior to 2026, then you get a 15% basis increase. So that means that $1,000 that I earned today that I rolled into an opportunity fund, come 2026, I'll only pay capital gains tax on $850 of that.
Wow, that's a really good incentive.
Yeah. And then the third piece, which is actually what people are most excited about, is that if you hold your investment in an opportunity fund for 10 years, any appreciation on that investment is tax-free. So that $1,000 I invest in a fund today, the fund goes out and purchases some property and sells it for $2,000 10 years from now, or 10 plus years from now, then you will not pay any capital gains tax on that appreciation of $1,000. So of that $1,000 that turned into $2,000, that all started as a capital gain anyway, you'd only pay tax on $850 of it.
Yes, it's a great incentive program and creates great opportunities in rural environments. Well, but what should business owners look for specifically in these opportunity zones?
Yeah. And so I'll preface this part by saying that we're still waiting on more guidance from the U.S. Treasury. And we're expecting that to come, really in the next couple weeks. And I think that will provide more specific clarity on how businesses can benefit from this investment. But broadly speaking, one of the main goals of this incentive was to stimulate business growth and job growth and entrepreneurship. And so opportunity zone capital can be used to invest in operating businesses that exist within an opportunity zone and are looking to grow. Right now, we don't have a really clear definition of how a business could qualify as a qualified opportunity zone business. And that's what we're looking for more guidance from the U.S. Treasury. But if you are a business that's located in one of the opportunity zones and you're thinking about raising equity, or you're a business that's not located within an opportunity zone but thinking about raising equity, you could definitely think about moving into an opportunity zone to take advantage of these benefits. Because the idea is that any investors that invest in your company, not only do they get the benefits of that investment, but they also get the tax incentives created by the Opportunity Zone program. And so that will, ideally make raising capital more easier for you as a business, and also potentially make it possible for you to get more favorable terms on that capital.
And a lot of our clients are acquiring or selling businesses, and it does give some better terms, and even it potentially could increase the value of some businesses.
Yeah, definitely. And I'll note here that both personal and corporate capital gains can be used and can benefit from this incentive. So your business could, if you could sell a business, and whether those gains are personal or corporate, you could reinvest those into another opportunity zone business and receive the incentive.
That's something I didn't even think about. It's almost like getting double the benefits.
Yeah, exactly.
So why don't you tell us a little bit about the benefits for opportunity zones in the state of Colorado?
Yeah, so I think there's three main benefits that we're seeing in Colorado. The first is that there's attention being paid to areas that were previously being overlooked. There's some statistic like 70% of venture capital goes to California, New York, and Massachusetts. And, looking at Colorado and the opportunities and the business and the tremendous entrepreneurial spirit that we have here, that feels crazy. And we want to unlock, we don't want to be just competing over, that last 25%, but we also want to be, we want to be competing for more and more capital. And now that these zones are on the map, we're getting attention from some of those, bigger investors or national funds that previously might have overlooked Colorado, particularly our rural and distressed areas. The second benefit I think that we're seeing more companies and communities think strategically about how to attract capital. A lot of our economic development efforts across the state, at both the state and local level, have often been focused on community development and business attraction. And now we're adding kind of a third pillar of capital attraction to that, which will really have benefits for businesses, for real estate, for all, residents of those communities, that will now see more support from their state and local economic developers. And then the third benefit is just more capital coming in. And so we think that capital can be used to address, some of the housing problems that we're having. It can be used for downtown revitalization. It can be used for infrastructure and clean energy. It can be used to support business growth and entrepreneurship. And so what's really exciting about this incentive is that, it unlocks flexible pools of capital that can be used to address a wide variety of challenges, both on the state and local level.
And that was something you just brought up that I wanted to touch on too, that most of these opportunity zones are in rural areas, but some of them are in urban areas as well, even in areas like downtown Denver.
Yeah, absolutely. So about 40% of the opportunity zones in the state of Colorado are on the Front Range, and about 60% are off the Front Range. And if you want to see a searchable map of those zones, you can go to choosecolorado.com/OZ, and there's a map where you can see all the zones and put in the specific address and see whether it's in the zone.
So my last question is that yourself and the Colorado Office of Economic Development have taken a unique approach in marketing these opportunity zones for the state. Tell us a little bit about what you and the state have done to promote and market opportunity zones in the state of Colorado.
Yeah, absolutely. And I think, we're definitely seeing other states come online, but we're really excited about the work we've done to position Colorado as a leader, because we think it'll help send a sign that Colorado has great opportunities for capital and is really open for business. So there's a couple things we've been working on. The first just being education and outreach, and that's why I'm so excited to be speaking to your audience today, but just doing as much as we can to get the word out about opportunity zones to all the different parts of the ecosystem across the state. The second is community support and empowerment. This is just a private capital incentive, and so there doesn't actually need to be any government involvement. But our working theory is that in order for this incentive to have the benefits that we'd like it to have on the community side, communities need to be empowered to understand opportunity zones and identify projects within their zones that will benefit their residents, and then make those projects as attractive and accessible to investors as possible. So we've really been working with communities across the state to identify those projects, to think about what other incentives they can layer on to make those as attractive as possible, and then to build, prospectus or pro forma that they can put in front of an investor to really ease the friction and make it easier for capital to say yes. And really benefit their communities. And then the third piece is investment facilitation and finding as many ways as possible for capital and projects to find each other. So we've had a few events, in-person events and pitch events. And then we also just launched a website. The URL is co-invest.co. And that's not just for opportunity zones, but that's for any real estate or business that's seeking capital across the state. Can go online and upload their information. And then there's also an investor portal where investors can create profiles, and then both sides can search across and find each other. So we kind of call it match.com for investing, and trying to provide a tech platform to allow projects and capital to find each other in Colorado.
Well, Jana, we really enjoyed having you on the show, and the work you've done has really increased the visibility of opportunity zones in the state of Colorado, which I know will unlock a lot of economic development in some of these communities. So thank you so much for joining the show. For the listeners, we will drop those 2 links into the show notes. So if you wanted to get in touch with Jana or learn more about opportunity zones in the state of Colorado, you can reach those there. Jana, thank you so much again.
Thanks, Jessica.
Hey, Jessica, you know what time it is?
Money time?
Almost. It's time for Listing of the Week.
Hey, we're back with Listing of the Week.
And we have Steve Wright from Transworld Business Advisors of Raleigh, and he has a franchise resale to talk about.
All right, Andy. So, all of these companies, there's like tons of franchises, but I think most of these franchise companies, they all have some type of sub sandwich. And so we have a listing of the week that we're really excited about. We get to work with one of our clients that's selling a Subway, and really excited about this listing because once we made it live, the buyer wanted to be really aggressive and dropped their price to about $139,000. I think the SDE on it's between $60,000 and $70,000. So we're really excited to represent this franchise resale, and we're hoping that the right buyer comes along to find it.
That's great. So how best to get in touch with you if somebody wants to buy that Subway?
Yeah, so the best way to get a hold of me by phone is 919-379-5776, or they can email me at swright@teamworld.com.
Great having you in.
Thanks for tuning in to our show today. If you like the podcast, don't forget to subscribe through your favorite podcasting app and leave us a review. If you have questions or suggestions for the show, visit us at tworld/thedealboard or email us at thedealboard@tworld.com.